Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Soho Holly Futures Co. Limited annual report. Soho Holly Futures Co. Limited offers a diverse range of services as a futures company operating in mainland China and Hong Kong. At its core, the company provides brokerage services for commodity and financial futures, allowing clients to buy and sell various types of futures contracts. In addition to brokerage services, Soho Holly Futures Co. Limited also offers asset management solutions, helping clients to manage their investments and optimize their portfolios. The company's investment consulting arm provides expert advice on investment strategies and opportunities, enabling clients to make informed decisions about their financial futures. Furthermore, the company is involved in risk management services, which help clients mitigate potential losses and maximize gains in volatile markets. Soho Holly Futures Co. Limited also engages in fund sales, providing access to a range of investment products for its clients. Overall, Soho Holly Futures Co. Limited's comprehensive suite of services makes it a one-stop shop for clients seeking futures-related solutions in mainland China and Hong Kong. Soho Holly Futures Co. Limited market capitalization of $7 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Soho Holly Futures Co. Limited holds a significant advantage in their industry. Soho Holly Futures Co. Limited trades at a higher price-to-earnings ratio of 137 times and a higher price-to-book ratio of 1.31 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 84% of total assets. This elevated debt level warrants heightened caution, as it may limit the company financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets in equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in a company can be attributed to several key factors. Revenue growth is primarily driven by the expansion of risk management businesses, which saw a significant increase of 71.36% year-on-year in profit. The overseas futures and securities brokerage business also contributed to revenue growth, with a 38.82% year-on-year increase. Additionally, the company's diversification of revenue streams through the Financial Services Framework Agreement has been successful, resulting in increased net agency fee income and fee income from futures and options brokerage. The number of effective clients in China's futures market has also seen an increase of 11%, contributing to revenue growth. Furthermore, the company's brokerage business has made steady progress through client segmentation, behavioral profiling, and precise targeting. On the other hand, revenue decline can be attributed to a decrease in assets under management, AUM, and income, resulting in a significant loss of RMB 12.53 million year-on-year. The insurance plus futures business revenue also decreased by 44%, contributing to the overall decline in revenue. The net income of the company underwent significant decline between 2024 and 2025. The net income decreased by 85.7% from RMB 29,826,197.5 to RMB 3,992,694.29, indicating a substantial drop in earnings. This decrease was also reflected year-over-year, with an 86.61% decline to RMB 3.99 million in 2025. The profit margins of the company also experienced a notable decline during this period. The profit margin decreased from 8.25% in 2024 to approximately 1.39% in 2025, indicating a significant reduction in profitability. This decrease suggests that the company's revenue growth was not sufficient to offset its increasing costs and expenses. The reasons behind these declines are not explicitly stated in the provided summaries. However, it is clear that the company faced significant challenges in maintaining its net income and profit margins between 2024 and 2025. The company's financial performance indicates a consistent generation of positive operating cash flow over the past 2 years. According to the provided information, in 2025, the net cash generated from operating activities was RMB 77,231 and RMB 772 million respectively on pages 26 and 39. Furthermore, page 185 confirms that the company had a positive net cash flow from operating activities of RMB 772,310,559.6 in 2025 and RMB 2,348,081,169.59 in 2024. Additionally, page 187 shows similar figures of RMB 734,552,419.6 and RMB 2,493,719,198.68 for the same years. The summary on page 268 explicitly states that the company's operating cash flow is positive at RMB 772,310,559.6. These consistent results demonstrate a strong financial position of the company in terms of generating positive operating cash flow. The company's debt level has undergone significant changes over the past year. While total liabilities increased by 9.92%, a closer look at the breakdown reveals that short-term borrowings and long-term borrowings both decreased. However, the overall total debt increased by RMB 1,583,166,323.12 from 2024 to 2025. In contrast, interest expenses have seen a notable decline. Net interest income dropped significantly, but more importantly, total interest expenses decreased substantially from RMB 535,694.39 to RMB 13,956.58. This suggests that the company is paying less in interest on its debt, despite an overall increase in total debt. The decrease in short-term borrowings and long-term borrowings may indicate a shift towards more manageable debt levels or a reduction in reliance on borrowed funds. However, the increase in total debt raises concerns about the company's financial health. The significant drop in interest expenses is likely due to lower interest rates or changes in the company's borrowing structure. Overall, while there are some inconsistencies in the data, it appears that the company's debt level has increased significantly, but interest expenses have decreased. This may be a sign of more efficient borrowing practices or a response to changing market conditions. The company's performance varied across different segments and regions in the recent period. On a positive note, the agricultural products segment showed strong growth, driven by increasing demand from overseas clients. The futures segment also performed well, with mainland China being a key contributor to this success. In contrast, the brokerage and asset trading segment struggled, failing to meet expectations. Hong Kong, China was another region that underperformed, indicating challenges in this market. These areas of weakness will require attention from management to address and improve performance going forward. Management is emphasizing a strategic shift in the company's approach. The core business will remain the focus, with empowerment through technology playing a crucial role. 3 major initiatives have been launched: stabilizing revenue, promoting transformation, and strengthening headquarters. The company aims to drive steady progress in its brokerage business while positioning risk management as a pillar. Breakthroughs are expected in asset management, and growth is targeted in international business. The asset management business will adapt to market changes and regulatory guidance, leveraging the unique advantages of futures asset management. A key aspect of transformation involves abandoning the trading channel mindset and transitioning to a strategic co-creation partner. This includes focusing on industrial clients and high-net-worth individuals, establishing professional industry service teams in key regions. Solidifying 5 supporting systems will consolidate development foundations, providing comprehensive backing for this transformation. The company is also prioritizing compliance to achieve long-term success. Research and development expenditure will continue to support innovation, with expenditures on intangible assets charged to profit or loss as incurred. A non-competition undertaking with Soho Holdings has been established, giving the company a right of first refusal on new businesses or investments that may compete with it. Overall, management is outlining a clear strategy for growth and transformation, emphasizing technology empowerment, core business focus, and compliance-driven success. There are growing concerns about inventory buildup within the company. A review of recent data reveals a substantial increase in inventory levels over the past year. According to page 52 of our records, inventory levels rose from $107,012 in 2024 to a staggering $972,729 in 2025, representing an alarming 802% increase. This significant buildup has raised red flags about potential supply chain disruptions and inefficiencies. With such a substantial accumulation of inventory, the company may be at risk of overstocking, which can lead to wasted resources, reduced cash flow, and decreased competitiveness in the market. That concludes the financial summary for Soho Holly Futures Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.